What up and welcome to the coffee shop, everybody. This is your host and Baristo, and so you know where you are right now. You just finished off lesson number 3. This is lesson number 4 that I did with a group called Trade with Confidence. Links to the Discord are below. In today's video, we're going to do buying and selling pressure that the candles show you. Also, we're going to see how to find order blocks inside of your trends. No, that's not. I want to find one here. Bearish candle with a bullish formation is like, it's like this. Okay. It's a bearish candle where the wick is longer than the body out the bottom. This is a bearish formation of a bullish candle. The wick is longer out the bottom, even though the candle is red. And a majority of the body of the candle is towards the top. It can have the less wick on top that it has, the better. Why? Because I said majority of the support is in that wick. Okay? So this is a bullish formation on a bearish candle. When you have this take place, you scalp to here because you know it's going to get there. It wants that order block to react, right? Stop. Wait for it to clear this zone, get a bullish formation, and you're probably going to retest and keep going through. Now, let's say you are already in your downtrend. You just look backwards at price, right? Just look backwards at price. Look at these pullbacks, right? Look at the pullback, find the formation, okay? The formation is a zone. You could literally do this, right? And say this is the supporting end of the zone, right? That's the supporting end of the zone. Come on, color, there we go. And this is the resistance end of the zone. So when price gets to this area, you can range trade until you get either above it or below it. That's literally all you do, right? But the important thing is being able to find that formation. And again, it only happens in an uptrend. You're looking for the lower high. Uptrend, you want higher highs, but a order block, you're looking for the lower high. It's here. You got one here. High, and it's again, it's got to be a swing high. It has to have a low on both sides. So you get this move, then you get a high, and then you get a lower one, right? Okay, no problem. You're just looking backwards, and you're finding that this business here, right? So here is your swing high. There's your trend. And you're again taking your long trades above that. You don't have to wait for the candle to close. If you're really good and you've got volume and everything you need, then you can literally start entering here, scalp your way up, like I said, to this level, right? Scalp your way to that level and stop. And you can see what happens. This makes a smaller time frame structure and price runs flat for a minute until you get a bullish formation. Here's your bullish formation. Right there. Majority of the candle body is on the top. The wick is longer out the bottom. The better one is here, right? Because the wick is even longer than the body, right? This is a nice little move up, but this is an even better one. So let me see what's happening here. Yes, all right. So any questions about this so far? I know we're covering a lot of stuff, right? Time for my drink. Oh, also, I don't have this thing on. I do this and there. Ah, there we go. All right. Sorry, just kind of adjusting my camera for the recording, for recording purposes. I know I don't have my camera on in the Discord chat. That's fine. I have it on in the recording software that I'm using. Let's see here. What we got? All right. Next thing that we're going to cover. So those are the, what do you call it? Those are, actually, let me kind of do that here. So order blocks are pretty cool because they become breaker blocks very quickly, right? So here's the high. I forgot to tell you what to do with the order block, right? Here's the lower high, right? Price was in an uptrend, pulled down, right? Made this little V formation here and gave you the low. Okay, so what you have is the support, resistance. Okay, and if you really want to get in depth, like I drew earlier, the high that pushed down, right? You can say that this is resistance. Okay, and you can say the order block. This is how I draw them on my charts. Order block is that color, and down here, that's not it, right? Went and messed that up. That would have been really cool if that was like a single shot, right? So now what was that low right there? And what is the low before this price was moved, broken down here? Okay, because this broke. I need the one that broke this. That's going to be right there. Yeah, same move right there. Okay, so this would be like a trading range that I would be careful in when price retraces to this level. Okay. And what you have happening here is the order block later on becomes it's a breaker block here, right? Later on, it becomes a consolidation zone. This becomes a resistance level. This ends up being known as a supporting level. Okay, so you got resistance, consolidation, support. So what you're doing basically, order blocks are really cool. They are small time frame key levels, right? So if I just do this and we look at price action, you've got the lowest point, right, as a key level. You got the highest point as a key level. This order block is the same as this on a really small time frame. It's exactly the same thing. That's all you're doing. You're drawing it out in a different manner, okay? And if we just kind of take a look to the right, what do we get? All of that right there, right? Comes down, hits the consolidation, right? I don't need to play it out for you, but you see exactly where it comes down to. And has trouble breaking these areas. What's happening here is if you did not draw this out on the left side, what's happening here is the market is creating liquidity. All right. You can see you're in a downtrend, pulls up, breaks structure to the low side, comes up, does not break structure to the downside. You should not have a low that breaks a previous high, right? If you're in a downtrend, you shouldn't have a low that breaks a previous high. That means you have support here and support here, but you don't have enough pressure pushing down. This move down, this high, should break this low. So that's telling you, okay, I've got liquidity from here to that closing candle like I just drew out, right? Hits the liquidity and it starts breaking structure, break structure, break structure. Give me a second, guys. Sounds like somebody's here real quick. The dogs are going crazy. Give me 1 second. I'll be right back. Order blocks are very important to map out, okay? Aside from liquidity, order blocks are really important. What you'll notice is that anytime you have an order block, liquidity is nearby. Every single time. Order block, liquidity, they're all nearby. And you always need to have retracements of that. As an example, there is liquidity that was created on this move inside this order block. I'm going to draw it out. You got this low. I'm going to find the close. This is very supporting. I'm going to find the move that pushed all of this up. You have liquidity down to here. Okay, this is going to be liquidity. Let me wipe. No, I don't want to take any of them away. I'm just going to color this one yellow just so we see the difference. Okay, and this is why it's important to be able to spot these things on the fly. And if you can't get it on the fly, wait for price to start moving against you and look backwards at the previous trend. Find the liquidity, find the order blocks. Okay, because when you do, you'll find out what was attractive to price, right? There's not that much liquidity up here because price keeps breaking previous structure. It means you got support here, breaks structure, does a really good job, okay? But the strongest liquidity I see is right here. And when price hits this order block, it created liquidity only to drive through more liquidity, collect the orders, and really take off, right? That's basically what it did, okay? And did the same thing, went through a fair value gap. This was an uptrend, right? Did not close above the previous high. So that means, again, there is liquidity here, right? Down to a previous close. Let's see. A close that was valid. Down there. And back here again. See? Spotting liquidity, spotting order blocks, very, very important. Gives you targets like you just can't lose. All right? So let's pull all of that out. There we go. Wipe it all out. Moving on to the next topic. Any questions? Any questions? Okay. All right, so finding order blocks within the waves. we got that. I think it's time to move on to the secrets of the algo now. I see Bucky leaving a message. Once again, some master level trading information for you guys. And coming up next is really, really important. It's going to be lesson number 6, Secrets of the Heikin-Ashi Algo version 6.